What do you do when your favorite stocks turn into a punching bag? Well, you do some homework to figure out if you're getting a buying opportunity or maybe the bull thesis is broken. Take Constellation Brands, STZ, the beer, wine, and liquor company, best known for Corona, Modelo, Pacifico. After a monster run over the spring and summer, Constellation peaked at 273 and changed in August. And since then, it's been slammed along with the rest of the market. I thought the company could turn things around when it reported this morning, but the stock sold off hard, down 3%. So what the heck is going on? When you look at the overall numbers, I thought they were very good. Constellation gave us a small revenue beat and a big earnings beat. Management raised their full-year earnings forecast. Core beer business is on fire. They raised their beer guidance, too. But the company also has a much smaller wine and spirits division that's not doing so hot. And they still have a huge investment in canopy growth, which wasn't talked about that much, but is viewed as an overhang. Plus, even though Constellation raised its full-year forecast, it did so by less than it beat expectations in the quarter, something that Wall Street just does not like. We own Constellation Brands for the Charitable Trust, and our conclusion is that the stock's buy into this weakness. I don't want to take it from me, though, because you know that I own it for the Charitable Trust. We got to take it from Bill Newlands, who's the president and CEO of Constellation Brands, get a better read on the quarter and what comes next. Mr. Newlands, welcome back to Mad Money.
Thanks, Jim. Good to be here.
Okay, so, Bill, let's get first right to the top. Beer was absolutely terrific. Solid results. I like the depletions, which is what matters. Growth of nearly 8% led the industry. So why do you think that didn't have more of an impact on people who own the stock or the analysts who talk about it?
Well, you touched on it in your opening. I think it's a great buying opportunity. When you think about the success of our business, we just continue to outperform the industry in great ways. Modelo was up almost 9%. Pacifico was up 15%. The Chelada business was up 40%. And we still see very solid success with Corona. So our business is performing, particularly on the beer side, very, very well. And we expect it to do that for a long time to come. Now, you do have an $800 million authorization, but you got a November 2nd meeting. I would prefer you to come out with all guns blazing then. I know you're not going to say right here, listen, we're authorizing all that tomorrow. But when your stock falls 3%, when you see those numbers, it's got to be tempting to think, well, 240 seems awfully inexpensive. It certainly is. It's a great buying opportunity for many of your listeners, Jim. We look at this all the time, and obviously our history has been in these kinds of instances, we're not afraid to buy back stock. We recently, as you know, had a $5 billion buyback scenario. And as you point out, we still have $800 million available from our board to do more buybacks. Certainly the situation is not reflective of where we see our long-term success. Now, let's talk about the turn in wine and spirits, which is so needed. I mean, your wine brands are absolutely terrific. Spirits, I know you have to do some sprucing up. The numbers were, I'm sure, not up to your expectations, but it seems like you do have a plan. I got some sense of the plan, but maybe you can tell our viewers more about this division. I hate this division hurting what's going on with beer. Certainly. A couple of things were in play here. One is we've done a lot of change to our business. 3 years ago, 2/3 of our business was in the mainstream, and the mainstream is very unhealthy. Today, it's 1/3. And even though that area continues to drag on the overall business, the top end of our wine business is doing quite well and taking share. We're going to continue to evolve our portfolio to the higher end of the business. And secondarily, we've always shipped it depletes and shipments have not always matched each other. We've insisted this year that they do that. What that means is the first part of the year goes against a much tougher scenario from last year. That should reverse itself in the back half of the year. So we expect over the course of the whole year, the wine and spirits business is going to look just fine and will be within our guidance. Well, what's happened to the so-called clears and the browns? They don't have that pickup that I expected. It's almost like you had a dry January and it stayed dry. Well, to some degree, we still think there's lots of opportunity. You know, things like ready to serve. Our ready to serve business with High West and our Mi Campo ready to serves and the tequila side are both doing extraordinarily well. So there is continuing evolving of what the consumer is picking up, but we think we're well positioned to take advantage of that. Now, I am surprised. I spoke to Molson Coors the other day, and it looks like with you guys too. People are liking these non-alcoholic beers. Now, you and I go back a long time. That was something that, frankly, it didn't taste great, so people didn't order it. What's happened? Because these numbers, this growth in these numbers tell me that people have discovered it's something that is worth drinking, that it's tasty. It is. When you taste Corona non-alcoholic, which is, as you probably know, is the #1 share gainer in the non-alcoholic sector this past quarter, it tastes very good. It tastes very similar to Corona Extra, which has always been the problem, is consumers haven't always liked a non-alcoholic or a very low alcoholic version. We've solved for that, and it's showing in the results. Similarly, we introduced Oro, which is the first light beer under Modelo, and that has performed extremely well. And it all speaks to the betterment trend. You're seeing a subset of consumers look for betterment. We see the same thing in our wine business. Meiomi has brought out a lower cal, lower alcohol Pinot Noir, and Kim Crawford the same in Sauvignon Blanc, and both of those have been leading their sectors as well. So it's certainly a trend, i.e. betterment.
Okay, speaking of trends, we had the Wall Street Journal today talking about this Ozempic. We know Walmart talked about how there may be a slight drop in the food category. Is it also impacting beer, or is beer kind of exempt because it's a different kind of occasion? It's more of an experiential drink than it is a drink with people worried about whether it's putting on weight or not.
I think you're right. We've seen no visible impact, and we have, and as you know, we engage with consumers all the time. No one has ever brought that up in our discussions with consumers. And part of it is the whole alcoholic experience is around social interaction.
Right.
And that's not always about the betterment scenario, although it is with a subsegment, as we talked a moment ago. So we think this is quite overblown as it relates to our category.
All right, where are we with the balance sheet? I know you're a stickler. You don't want to have too much debt. You want to be able to buy back as much stock as you can, but you certainly don't want to put any sort of rating in jeopardy. The company generates a huge amount of cash. Are you satisfied with where you are? Do you think you can still drop that leverage?
We think we can drop the leverage. We've said we're going to get back down to 3. As you know, it went up a shade when we did the collapse of the B shares. But we believe we can get back to 3. We'll remain investment grade. It still allows us to do both buybacks and dividends. Our capital allocation process has been very disciplined over the last several years, and we plan to keep it that way.
And how is it with your new board members suggested by Elliott Partners?
It's been very good. Our collaboration with Elliott has been very positive. They've reinforced many of the things that we were already doing, and they've been a big help to us in our preparation for our investor day. So that interaction has been quite good. It's also been very helpful what we've done on a governance basis. As you know, we've changed our board to some degree. We have 2 new board members that brought increased financial expertise to the board. Our 2 longest-serving members, as part of refreshment, stepped down and did not run for re-election. And we're out searching for a new independent chair of our board, who we think can also add some value. So we're very excited about some of the governance improvements that we've seen over the last year. And
then just one last thing. I was trying to figure out the bar business versus the store business where people are buying and not. Bar not as strong versus the actual supermarket?
The supermarket sales have been very strong. In fact, one of the things that's been interesting to watch is our IRI Circana data has been much stronger than we normally see. There's always a little bit of delta between that and your actual depletions. That has expanded because many of these chain operations are doing a much better job comparatively than what some of the smaller shops are doing. Relative to on-premise, I'd say, the single biggest thing that's caused a little bit of challenge is football season has been late to start because the weather's been so warm. There's a little bit of, I'm getting cold, I'll go inside, I'll watch the game. That hasn't really picked up this year to the degree, although at least here in Chicago, the weather's about to drop out of the floor at the end of the week. So that'll probably pick up. All
right. Well, look, I'm looking forward to the November 2nd meeting. I hope that there'll be some news. Maybe you come on if it's really exciting. We always welcome you. Bill Newlands is Constellation Brands President and CEO. Thanks, Bill. Good to have you on.
Thanks, Jim.
All right, Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky is the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.